Freaky Finance here. Today we're going to dig into AMD. We haven't done a company like this since Intel. This is the fun one. We'll go into some overview and then we'll jump into the numbers and stuff and what the thought process is behind this one. One of the reasons why I'm doing the video this time, everything's kind of up. So usually when everything's up in a row, I kind of pick which things I need to start trimming. It doesn't say anything's bad about the business, it's more about risk management things. And so one of the things I wanted to share for this channel is how I think about that. So for AMD, in my mind, it just is set up very well in between, I want to say, now until 2029. That's kind of where I have confidence in it. We're going to jump into some of the reasons why I think the market's misunderstanding AMD, why I think their earnings expectations are too low, their share takes expectations are too low, and I just don't think the expectations are good enough. I think AMD will easily beat them. If you want, there's some great white papers on the CDNA4 architecture. We've kind of talked about transistors before, and we talked about x86 and RISC-V. We're not going to go into too many technical details today. We're going to talk about certain things that are important. There is a lot of information here, but you're going to see a theme in the overall industry. You're basically trying to get smaller and smaller with more transistors in a condensed area. That's been the game for a long time. And AMD's actually done a great job with this, especially over the last 5 years. We're gonna just some names just to hear. We're gonna talk about Instinct on GPU sides, Epic on the CPU sides, Ryzen on the APU, Ryzen on PCs in general, and then the ROCm software stack. So we're gonna talk about all these things, so just kind of just helps you visualize where it goes where. So if you hear Instinct and Epic, you're thinking GPU, CPUs, and Ryzen, you're thinking PCs, Radeon. We're gonna talk about a little bit as well for games, but they basically have 3 reporting segments now, which changed in the 5-year history, which the AI picked up on, which was good. But anyway, you have data center, client, and gaming, and embedded, which they acquired, and you're going to see that in the balance sheet. And in my mind, they overpaid for embedded, but they've already paid it back through share buybacks through the dilution, so they've already offset what in my mind, what they overpaid for. The business itself, Q1 was very strong. You're seeing up 57% year over year in data center. So that's the huge driver. You're also seeing a pickup in client and gaming, which is good. But now we're starting to see, and I think we're going to continue to see, at least for AMD, an acceleration off a relatively easy comp set. And the reason why is product leadership. And we're going to talk about that in a second because it really shows up like a sore thumb when we go through the history of AMD over the last 5 years. And this is important for the industry too. And we talked about this when we talked about Intel. Is the market for this type of product, when you have product leadership, not only do your revenue accelerates, but your margins pick up at the same time. And that's usually what analysts mismodel, is the rate of the acceleration in revenue is very rapid. Like the winner really takes all, as soon as you have a superior product, all the big guys flock and it shoots up your demand that you can charge a higher margin. So you get both at the same time, and analysts often mismodel that. So it creates these big swings, and that's why NVIDIA shot up like it did, partially underestimating how rapid these switches can be. And these big guys like the Apples and AMDs, the Apples, Google, Amazon, which we own, it underestimates how big they are and how much weight they have. And that's one of the things that's great now, and down the road, it's in my mind at the risk, because we know, like, because we're overweight Google and Amazon still, is we know that these guys are creating and designing their own chips. And the reason why is because they know that what they're paying is relatively high, and they think over time they might be able to do a better job. And we've seen that, like Apple with the M1 chips kicked out Intel, right? And I have a feeling that that type of trend is going to continue, because the resources that Google has, like AMD, maybe made $2 billion in EBITDA this quarter, right? Google makes $1 billion a week in cash flow, maybe $1.5 billion now, right? It just the resources that some of these big cloud guys have are massive relative to even AMD, even to NVIDIA, even though NVIDIA has a huge market cap right now. In terms of the resources and the R&D and the free cash flow generation, these guys are big. So I just have that in my, like, that's why I'm like, I'm not as confident 2030 out, but I'm confident AMD like now until 2029. And that's why I kind of word it that way. Anyway, in terms of the data center segment, it's the main one that's shooting the lights out. And this trend has accelerated lately. And we're seeing good partnerships, MI355, the software stack we're going to talk about because that's the main bear case and the main uncertainty probably for this year. One of the things to note about is that data center really wasn't a place AMD was even in, like very nascent. Then all of a sudden, 2020, really AI is right here. 2019, 7 nanometer Rome EPYC basically just took the lights out. Density and power efficiency over Intel's server chips. That started building trust, and they took more share with Milan and more share with Genoa. Intel was like the trusted provider, so that's a huge thing to try to shake the boat on an established segment. And you're going to notice again, it was product leadership that did it. It's product first, and AMD is product first. Give the people what they want in the most efficient way they can have it. So anyway, client and gaming, you're going to see a little bit. I was talking here about Zen and Ryzen. Basically, again, you're just getting more dense, more efficient over time. And again, they've taken share in this space. Radeon, it's tough because NVIDIA is so strong in the GPU side. And we also own NVIDIA, but not a big weight. For client and gaming, there's just a lot of great margin here. And the comp set wasn't that great last year. A lot of gaming is very cyclical, and so is client, very, very cyclical. So you can see pullbacks. They have to digest the inventory. You would have heard that in 2022 and 23 if you followed the space, right? And Ryzen really started taking share, I would say, with the Zen 3 architecture. Again, the AI is right here in late 2020. Zen 3 really was a big step up from Zen 2. And the chiplets were just, in my mind, like it was just leaving Intel's little x86. And we're going to talk about the walled garden because it comes up again against NVIDIA now in the software stack, which will be interesting. So Intel had this big walled garden where basically it was Intel's way or the highway, and that left a lot of innovation that was happening off the sidelines that Intel maybe should have been more privy to if they were more open. And AMD took full advantage of that, in my mind, and that's one of the reasons why they beat out Intel while being a materially smaller company than Intel in terms of free cash flow generation at the time for Intel. But the turns have tabled. And it does, AI again does particularly point out that PC market does experience correction, so it is very cyclical, so that's something to be aware of. We already had that happen, so it's a good thing now. But we don't know how that's going to happen in the next 2 years or 3 years. And then they do have the Xbox business and the Sony PlayStation business. And then they also have the discrete GPU, where Radeon's is competing with NVIDIA's GeForce line. And NVIDIA has 90% market share, right? So it's NVIDIA GPUs are still second to none. But the gap, and that's another theme we're going to talk about, is decreasing. It's shrinking over time. And then the third segment is the embedded. And that's really just helps diversify in my mind. It helps de-risk some of the volatility from the cyclical market. Like you're going to see cloud providers also be cyclical. They're going to digest their inventory. If they pull back spending, that CapEx, right, which we know is actually accelerating still and likely to stay accelerated for 2025 at least because of the bill that passed, which we thought was likely. Even though the media was kind of trying to say, oh, it might not, it didn't. It was always probable. Anyway, so here it's important because it helps diversify other parts of the business, more stable businesses. So industrial automation, right? 5G communications, aerospace and defense. It just helps split it up. It makes the overall pie better. So I understand why they did it. They did overpay for Xilinx, in my mind. Now they've already recovered that, what they've overpaid in my mind, through share buybacks. And you're going to notice the shares aren't even down that much, and that's because they're basically trying to offset this dilution from this acquisition. And you'll see that when we go through the balance sheet. And then, I guess, just to finish the last quarter, really strong growth. Again, you're talking 55% GAAP EPS growth year over year, or non-GAAP rather. Material is strong. Obviously, in percent terms of GAAP would be up off the charts. But just materially better business even than it was a year ago, and accelerating into it. And what was great here is that we knew this number. Well, we didn't know, but we had an idea based on estimates that this number was going to be pretty strong, and people were selling into it in April, the tariff tantrum, right? And that's one of the things that's great with fear is that you can really take advantage of people's misconceptions about reality at certain points in time. And this AMD was gone from 200 to 100 all the way down to like 80 or something. I might even hit printed lower than that. But I remember picking it around 86 or 87. Oh yeah, I should disclose before we jump into the numbers that I do own AMD. I've kind of already implied at the beginning of this video. It's about a 6% position, so slightly overweight, and that's kind of why I do the video, to be like, should I start trimming? Maybe I should let it ride. And it kind of helps me visualize, so maybe I should do this and this. And the other thing you have to think of is, what else am I going to do with the proceeds if I do sell it? What am I going to run it into? And the thing is, when everything's up, it makes it harder. So that's another part of the problem. It's not going to be part of this video, but it's another part of my thought process. Because again, it's like a garden. Like, something's growing, AMD's growing. Should I start trimming it, or is it too early? Should I let it grow a little bit more wild growth, like I am with Amazon and Google? And it's tough to say, and you're going to see me go back and forth on this, because there's certain things I really like about AMD, especially the next 3 years, and certain things I'm afraid of in like the next 5 years. So, and then you always have Taiwan and uncertainty like that, which always makes it, you'll never have like a 20% position or something, or at least I won't in AMD, even if I'm very confident in the business, because there's things that could influence it more than I would be comfortable with that type of position size. But that's just my judgment. So anyway, AMD up about 35% since April, and then this AMD one up 72%. That was when there was a lot of fear, so I was like, I gotta buy it on this account too. So I have a decent amount of exposure in AMD, about a fair weight, maybe slightly over now after the appreciation. Fabless is important, so you're going to see when we go through the numbers, CapEx is actually pretty low because they're designer chips. TSMC is the quarterback that makes a lot of really the cornerstone of innovation that we've seen today. Don't get me wrong, software is always important, but the fact of the matter is that TSMC and their ability to go to the 3 nanometer, the 2 nanometer faster, better than everyone else is critical to this supply chain, so you need to know that. And AMD, it's great because they're fabless, so they just make a lot of margin on the design and marketing of the chips. So just make the best product you can. That's all they have to focus on, and then send it to TSMC to make it. And this is also important: higher growth, higher margin data center market. The data center market is higher margin, so if your sales mix is accelerating in that segment, you're going to see margin expansion on sales mix overall. That's also what we're seeing, which is great. That's the reason why we own it. There is something here: concentration risk. AI struggles with it. I view concentration risk as bad, right? When you include Oracle and with the big guys, they have 50% of the revenue is likely from these 5 companies. AI claims that around 54% in net revenue previously, but it's not reported in the latest 10K. But the AI is right here that it's strength in that you don't have to attract new customers. So, but it's fickle because if you're, again, it's all led by product leadership. So these customers are going to go if you don't have product leadership, and your revenue first decreases or stagnates, and then your margins compress at the same time, and then your multiple will compress. So you get hit all across the board, and these things are huge momentum plays like that. So whoever has the best product wins. And it's very, you don't know what the next season's going to bring. So next year, I'll be very excited to see what AMD does against NVIDIA. But there's a couple things that I like this. I like the cards that AMD has. In terms of the growth, we're going to go quickly to the financials because this is already long. It's going to be a long video because it's a little bit more technical. But in terms of the segments we talked about, you'll notice they're a little bit different because the reporting period they changed the reporting structure. But anyway, computing and graphics, now client, you see the boom and bust. So 2021, work from home, shot up, a lot of demand. We saw that across the channel, the whole industry. Data center growth really going from 3 billion to 9 billion in 5 years, right? And we just saw acceleration in Q1 2025, a material amount. Gaming, you can see, is very cyclical. And AI correctly references a 58% decline, reflects the maturing console cycle. But you can see when new products come out, like the next Xbox comes out, this cycle is materially beneficial for AMD, assuming they get the product again. And then Xilinx, I think of more of a slow, steady diversifier on the embedded side. But it is high margin revenue, again, from industrial auto and the comms market. At the end of the day, you see a company gone from 9 billion to 25 billion in 5 years. So material growth, right? Nearly tripling in 5 years. COGS did track the revenue, but again, the margin expansion because of the favorable mix into data center, which is higher margin business. So you're seeing margins expand. And here you can see it going from 44 to 54. And that trend will continue both with more data center revenue, but also if they can get product leadership, which they don't even have yet in data center. So this trend should continue if I'm right, and we're going to go into some reasons why I think I am. And G&A is scaling. It's not a material. This isn't like a huge scale game. It's not as obvious to me as Pinterest or AMD, or not AMD, Airbnb, in terms of that obvious scale, or Uber, where you could really see that scale turn out. You're not really seeing it. They're still keeping a decent amount in G&A as they grow. But overall, you're seeing the margins pull through and carry the results for the company. So about 50% better on an after-tax basis. Diluted share count, so negative here, this is really the Xilinx shoot up. So boom. And then they've been trying to offset the dilution ever since. Here you can see the GAAP EPS is kind of a little bit over place, and so is the share price. It does follow, like if there's a decline, the share price does go down pretty harshly, but usually that's been an opportunity, right? Especially with a company that's growing like this. The CFO going from 1 billion to 4.2 billion, it's pretty crazy. CapEx remains relatively small relative to the free cash flow generation. And you've seen this share buyback start stepping up now that they're creating cash flow. A lot of it's starting to come back to investors and offsetting the dilution from Xilinx, which you couldn't tell from here because of that acquisition. What else is there? We're starting to see, like, again, revenue is only up 13.8% year over year in 24, and we just saw revenue shoot up materially in Q1 25 so far, and I think that's reacceleration is not properly priced in to AMD. In terms of the valuation, this is a growth, one of my growth guys, so I'm not expecting a good valuation. However, I do want to point out the expectations for this company. They're only expecting, like, in my mind, relatively easy EPS growth for what I think we're going to see in this space. EPS is only at 3.18. This is consensus estimates, so, and the analysts have always been wrong in this space. So 3.17, 4.87, 5.62. And again, part of the reason why they're wrong is because it's winner takes all. Whatever the next product leadership is, you're going to blow the lights out in revenue, and you're going to blow the lights out in margin all at once. And that's a hard thing to model. But anyway, you can see the current P forward, not amazing, right? Like, it's 3 years out. I'm finally at 20 times, which is something I'd like to pay. But during the tariff tantrum just 3 months ago, I was getting this 15 times 3 years out. So there's something that's growing, and I know it's accelerating, and I know the setup that we're going to talk about. It's just, in my mind, is like, so the idea was amazing here, and now it's kind of like average here. And that's what I also want to point out, that the price you pay does matter. So when you can buy a great company during some type of fear, when you know the business is accelerating into the fear, it's a great feeling to have. And those are one of the great setups that we were able to get during the Trump tariff panic, and there's another panic in the next little bit. Who knows? We'll look at it and see, is the business performing? How are their products performing? Okay, am I getting the price that's reasonable? And we'll buy more again. Right? That's how you got to treat things. It does represent the goodwill here. We kind of skipped over the balance sheet. Balance sheet is okay. I mean, there's no debt, so it's fine. And very little debt. But the main thing here is the goodwill shoot up from the acquisition. Again, goodwill is just how much you overpaid for something, in my opinion. Right, so 49 billion Xilinx acquisition funded a lot through shareholder dilution, which now they're finally starting to offset. That's worth bringing up. What else is there? This is what I also don't think is properly expected, is the use cases for AI increases, especially on the inference side, which we're going to talk about inference versus training in a second. But it's just not understood, right? Inference workloads scale directly. Like, all this stuff I created with AI, right? Just, I'll make it other research, the thumbnail, this annuals, all this information, just all by AI now. I don't have to do it. It saves me about an hour per video in terms of research, and pulling things together just way quicker, right? But it's getting better every time I use it, like every month. Here you can see projecting the path of inference market share. NVIDIA at 92%, AMD at 8%, AI accelerator market. So basically, NVIDIA has all market share. And analysts, like a lot of these, should have said this, the expectations, they're only expecting like 10% market share for AMD. So it goes from 8 to 10. Like, it's not, they're not asking for much to get these kind of numbers. And I'm like, well, what happens if they get 12? What happens if they get 15%? Right? What happens if they actually get product leadership and they start shooting the lights out? Right? Or what happens if NVIDIA finally misses a step? There's so many uncertainties here, and the fact that they're only estimating like 10% will be AMD's then. 5 years out, like, okay, are you sure? Because I'm seeing the use cases are a lot more inference focused, and that's where AMD is a lot more focused in. But we'll see. Anyway, the revenue growth expectations are also not much to ask for, except for the current year, 23%. I do think they'll beat it, but it is higher. But you can see these out years, they're only expecting 16 and 14. So they're expecting deceleration in a place that's currently accelerating. And that's what I also like to see. They're not expecting the thing to keep shooting up forever. I mean, the expectations aren't actually that hard to beat. In terms of the bear case, this is the biggest, well, one of the biggest ones, the ROCm execution risk. It's also the biggest opportunity. So this will make this idea either okay, like it is now, right, up 40% or up 80%, or it can make it amazing. And that really depends on if they can close the software gap. And I have no angle on that. The market doesn't think it's likely to happen, or at least based on the market share, they don't think that it's going to move the needle, whether they do catch up. But I think the gap is closing. The AI thinks the gap is going to close a bit in 25 and 26, but that's just worth bringing up. There is the David versus Goliath here, right, in NVIDIA. You do have the sector-wide risk, and that's really true, and that's why this position will never be crazy big, because I don't know what's going to happen. TSMC is a crucial supply partner, so if anything were to happen in Taiwan and impact the production, it's going to impact the stock. And then in-house silicon threat. We kind of talked about that. All the big cloud service guys, so Google, Amazon, are designing their own chips, right? So that, and they do have a lot more resources than AMD currently has. So that's something to also think about, right? Like that M1 example of Apple kicking out Intel. These big guys can cut them out if they can make and design a chip better than what AMD or NVIDIA can. So that's something that also needs to focus, and that's what I'm more worried about in 2030, I'd say. And it could even be earlier, right? You really don't know. So that's what I am most worried about in terms of the position size. Inference versus training. I mean, AMD, the M1 350 that just came out, 35x leap in AI inference, and the MI 355X deliver 40% more tokens per dollar. And tokens for dollars getting more and more important. AMD is starting to focus on that, and you're going to see that metric get pounded out over and over again in the next year and a half for sure. AI thinks the inference market will be significantly larger than the training market. And here's it says train once and for many paradigm means that AI will become integrated into our daily lives and our phones, cars. I mean, I'm already using it every day, right? So, and I think more people will once they realize how powerful it is. Training involves performing calculations on large batches of data, making it perfect for GPUs. Again, that's NVIDIA. So when you think training, think NVIDIA has an edge. When you think high precision computing, training also benefits from high precision computing power. NVIDIA has an edge. And this is the part that it kind of splits a bit, is significant memory bandwidth. Moving large data sets to and from the processor is a current major bottleneck right now that's happening. And it needs, basically you need high bandwidth memory to offset it. And that's currently not being addressed as well with NVIDIA as it is currently being addressed with AMD. And you're going to see this. Inference is more about agility and efficiency over raw compute power. And right now NVIDIA is focused on raw compute power, and AMD is focused on this agility and efficiency, getting that cost down per token. And this is important too. Inference can be performed with lower precision data types without significant loss in accuracy. So you can still get the same results while being more efficient, basically. And so, I mean, that's what you need to take share, and I think that's not mispriced. So if AMD's focused on this, or NVIDIA's focused on this, right? So it tells me NVIDIA is going to keep winning training, and AMD is going to start winning out at inference. And given inference should be the larger market in the long run, we should see the share actually increase a lot more than 8 to 10% from the 8% it is now, which is what analysts only expect. In terms of another way to represent what's currently happening, especially as we go into 2026 showdown with the M1 400, this is totally focused on memory, right? Memory bound workloads for AI, for large language models. Conversely, the NVIDIA, so the Rubin, the R100, is delivering twice as much compute performance of the M1 400, right? Compute focused, dominate training and other really heavy, hard compute tasks. And this will be the crux, and that's why it's in purple, because I don't know. AMD may win total cost of ownership, so efficiency per dollar, where NVIDIA will likely punch through and win in training easy, and even in inference, sometimes in performance per watt, depending on what the task is. So This will be very interesting to see how this shapes up where the sales go for the big guys. And the AI correctly reads this. AMD is betting that the next generation of AI, particularly in the rapid growing inference market, memory capacity and bandwidth will be more critical performance bottleneck than raw floating point operations or flops. So basically, they're thinking focus on memory capacity and bandwidth, so getting that results from here to here, large data sets moving all over the place, is going to be more important than the raw compute, at least for this next cycle. And that, to be fair, currently is the bottleneck that we're seeing. It's not that the machines can't do the computes fast enough. It's just they bring the right information, and all the information over is sometimes a challenge. Again, NVIDIA is going hard for power, aggressive innovation, by pushing boundaries of silicon technology and system level integration. We're going to talk about the integration part in a second. It's a big advantage of NVIDIA. This is important that to see NVIDIA step up as well. Like the R100, the Rubin, is 2.5s better than just Blackwell, which just came out, right? And doubled, again, the compute of AMD's M1400 that's going to come out. And this is where it breaks down. Like if you had to see a page like what 2026 could look like, you're kind of seeing the focus here. So you're seeing NVIDIA, Rubin just destroy in terms of compute density, right? Significant compute lead. And then, but at the same time, you're seeing AMD show up in terms of memory capacity, memory bandwidth, then the scale out bandwidth. And this just shows exactly what the focus is on each. And we're not sure how the market share. I mean, NVIDIA has 92% market share. AMD just needs to show up and show, hey, we're better than them in this, this, and this, and this. And we should start taking shares just because the inference market should start growing faster than the training market because the use cases are accelerating. What else is there? For inference, the battle becomes more nuanced and tilts in AMD's favor for emerging use cases. Inference modules with very large context windows, often bottlenecked by memory bandwidth and not compute. The GPU spends more time fetching model weights and context data than it does performing the calculations. So basically, AMD is trying to answer that question this next cycle. The fully integrated rack is more critical, and currently NVIDIA has in my mind, the monopoly on that. They have a lot of these lock-in things. So the interconnects, the InfiniBands, right? They have a lot of things where they can cross-sell, and that's where they're having an advantage right now is with the fully integrated rack. They're like, you know what, we can control this. But you have to use this. And now that's good for some people, but other vendors are going to be like, well, we want our control of our own stuff too. And some of them don't like being locked into using NVIDIA and forced to use NVIDIA connections. I have like the 60 pages of this research report where I'm taking some of this from is, in my mind, this part's very important. AMD allows customers to avoid the proprietary tax associated with NVIDIA's end-to-end InfiniBand and NVLink and NV switch system, which can lead to significant cost savings and prevent vendor lock-ins. So you're not forced to go with NVIDIA for everything if you go with them. This is probably, in my mind, the most important sentence. AMD may offer lower initial capex and networking costs, potentially leading to better performance per dollar on memory-bound interface where its hardware excels. And for compute-bound training, NVIDIA's higher throughput might provide a better TCU by reducing the time required to complete jobs. So it kind of tells you where the two heads at. AMD is specifically positioned as a champion of an open ecosystem, whereas NVIDIA has been a walled garden, which basically works until it doesn't. It really depends on how open you can still be closed, but you need to be open to what's happening around you so you don't fall behind in innovation, your own walled garden, which is what happened to Intel. I'm a big fan of the open ecosystem. It's another reason why I'm a big fan of AMD. And then here, this last part, this video is already longer than I want. So QDUP has been a decade of refinement, at least for NVIDIA. It's the huge linchpin. The software in NVIDIA is better than AMD software right now, today, and it has been for the last forever. But AMD is playing catch up with those open source ROCm. Open source has a lot of advantages. One, it automatically, the developers will always want to go open source, and it's just a lot easier. And this is just my opinion. Open source tends to have wild growth. So it's chaotic, it's self-correcting, but it's superior for rapid improvement, especially when you're trying to play catch up. So I think the ability, or what's priced in right now for AMD, is that it barely takes any market share from NVIDIA, even though we know inference is outgrowing. It barely takes share, but we know it's focused on a whole lot of use cases that are for more efficiency and memory bandwidth, which it doesn't need the raw compute power that NVIDIA is offering. And then we know the market doesn't think that AMD is going to catch up or become even close to parity with NVIDIA's software. That's what we know. So I get all these three things, which I think will actually be more beneficial than what the market thinks, at a price that's no longer dumb cheap like it was during April, but still not crazy expensive if I believe what I believe. Anyway, for ROCm, it has had issues with bugs, stability issues, right? Closing the software gap remains AMD's single most critical task. In my mind, if they can close this gap, this idea becomes, instead of just a good idea, like an okay idea, it's going to become a great idea. Like it'll become one of the best ideas for the next 3 years if they can do this. And I just don't know if they can. So this is my biggest unknown, is this ROCm versus CUDA. CUDA just works out of the box, right? That's why it has that premium pricing. We constantly have new features and performance updates in NVIDIA, right? Then you have certain things like a more complex installation process compared to CUDA, impossible to use to work, so it can be challenging, right? These are just 2025 comments. So this is what needs to improve the most for this idea to become amazing. And then the central question, so I asked it, hey, well, you think this gap can be narrowed? And the AI says yes. The nature of the narrowing, however, is multifaceted, so it hedges it. So the hardware and software performance, or the hardware gap, is poised to achieve performance parity with and critical memory clear leadership. This will be a big shift from prior generations when it trailed on all key metrics. The second one is software maturity. ROCm 7 is superior to ROCm 6, like they've already started to improve on it. They know there are issues in it, right? 3.5 better in inference and 3 times in training versus ROCm 6 in all of the exact same hardware. A huge unlock if they can keep pushing that. And I do think open source will allow them to do that faster than what the market thinks. And this is a good assessment too. There'll be no faster or more efficient accelerator. There's going to be a trade-off here, right? If you're going to go training hard compute, you're going to go NVIDIA. If you have something that requires a lot of bandwidth, a lot of memory, you might consider AMD. And again, you don't need too many people to consider AMD to get that market share to go up more than 10%, right? From 8 to 10. It's not asking for much. And I just still feel, even though the share price has shot up lately and we're up 72 and 35, I just feel like this idea could run if we get just more product leadership. And they have a history of giving product leadership over time and playing catch up at an extremely rapid pace. And then this is just more recent. I tacked this on at the end of the video. It's just now that the bill's passed, which we thought was likely, I just asked the AI to be like, hey, what's the effect? And it calculates it correctly. So R&D expensing for domestic is going to be huge for a lot of companies. But the thing is, we don't know, and this is true for a lot of companies, we don't know how much is actually U.S. R&D versus rest of the world. This tax cut is only for U.S. focused domestic R&D. So here the AI assumes 60% of AMD's spending is domestic, but we don't know that in terms of R&D. But basically what it does is just calculate the effect per share, and then it says, based on the tax cut, and if we assume the 60% is domestic R&D expense, then we should save about 40 cents per share in taxes alone just from this bill signing as well, which is nice. There's a lot of things I think are not modeled correctly. Honestly, I saw a lot of models that were still factoring in the probability of success of this is only like 70%, which was kind of funny because I viewed it as almost a lock-in. So we should see earnings expectations just start increasing anyway, just from people actually monitoring an actual effective tax rate that's lower than what they currently have in their models for this year and for the next 4 years. So it's just I don't know. there's a lot of things I find funny when I look at analyst consensus models based on what I think the future will be, and this is one where I'm far ahead of what consensus expectations are. But anything can happen, especially in this game. It is very punishing if you're a loser in this space. Here, just to close out, I just want to show like how much bigger, again, these big squares are the market cap, how much bigger NVIDIA is versus AMD. Like how many AMDs could you fit into NVIDIA, right? A lot. That's how lopsided this is. And AMD just has to carve out a little bit more, and this idea is going to work. And whether that's with the inference over growing faster than training, if memory is going to be more critical than just raw compute power, and if ROCm can catch up to CUDA, any of these things happen, this idea is going to continue to work. So it's it's just a special time to look at AMD, and especially if you get those fear pullbacks where it makes the decision to buy a lot easier because the price is right. I know the stock looks like it's just gone up, but that's because of the product leadership. You'll notice the stock performs when the product leadership accelerates, right? There's a reason why it went up like this in 2020 and 2022. AMD wasn't even a big player in the data center prior to 2020, right? It started just with the EPYC Realm processor. So there's huge unlocks here for this company. It's not even the same business it was 5 years ago. It wasn't even the same business it was 3 years ago. And the analysts are obviously expecting more of the current status quo, and I don't think the business is going to be the same as it is 3 years from now. So anyway, I'd like to know your thoughts on AMD, and have a great rest of your week.